Good afternoon, everyone, and welcome back. This is Daily Trading Analysis with a quick market update for today, April 11th. Today, we are not getting any important. We just got business optimism index a little bit higher than expected, but nothing huge. Fed Harker and Hachari speaking, and some notes on the some of the Fed that Fed Williams saying that if inflation fails, we will have to lower interest rates. If inflation falls, obviously they have to lower interest rates, and he says that one more rate hike is a reasonable starting place, but it will be driven by data. And apart from that, we have IMF that is cutting GDP forecasts for everyone and says that global economy is heading for weakest growth since 1990. Weakest growth means that investors are basically really concerned and worried about the growth. Growth is everything in the markets, and when a big IMF says that, well, basically they are saying that the world economy is not currently expected to return over the medium term to the rates of growth that prevailed before the pandemic. The outlook reflects the tight policy stances needed to bring down inflation, the fallout from the recent deterioration on financial conditions, all the banks that are falling, and also the ongoing war in Ukraine. So basically, banking turmoil, they are cutting forecasts due to these kind of issues, and also the financial sector stress that could amplify and contagion could take hold. And that would weaken the real economy, and the big banks might get affected, and also the overall economy. So a hard landing, particularly for advanced economies, has become a much larger risk. These kind of things scares everyone. And I think that's one of the main reasons that we are seeing this kind of weakness. We are seeing weakness overall in pre-market. We basically consolidated. We tried to go higher on the futures on the Nasdaq, but we literally got smacked in 2 times. And we started the open just directly going down in a big sharp trend down. We are seeing signs of consolidations, but we are super weak today. This was a really scary bull trap, and again going lower. People are trying to buy this 13,068. That is one of the main levels that I had in the daily chart, this pivot that is holding through all this consolidation, all these weeks. All the closes are above this 13,068. And actually, I was trying to buy this. I saw this spike. I was quite confident, but then I got chopped out here, and we are still being rejected. So the trend is down. It's not that aggressive right now. We have more or less this kind of trend. It's not as aggressive, but still a downward trend. So you have to be aware of the conditions. The conditions is that today is quite weak. It's surprisingly weak after this big hammer on the daily, after yesterday's big push. Look at this. So big reversal yesterday with big open interest on the Nasdaq futures and big open interest on the S&P futures. So I was expecting at least a consolidation day. Oh, look at this. This was the move that I was looking for. Well, you can't catch them all, they say. So here it goes. Still below point of control, but I think this is quite good. I would like to see a higher low around here to just break the point of control and this resistance. Other markets. Well, first of all, honorable mention for Microsoft minus 2.40% and Amazon minus 2.55%. Tesla is the only one. Look at this. He's boosting this move on the Nasdaq. I don't know why. There's no news as far as I can tell. And that's Tesla is pushing consumer discretionary. Look at this. This is super strange in this situation that consumer discretionary is being pushed up like this. Financials are doing great. Energy is doing great, piggybacking on this impressive move 1.70 for crude oil. So energy is pushing higher. And as always, dollar is seeing a lot of red. Look at this chart. This chart is just seeing weakness, weakness after weakness. Dollar overall compared with other currencies is feeling quite weak. Yields, this is the 2-year yield. If we check the daily, we are still in choppy land, in the middle of the consolidation. We would try to go lower. I mean, yields going higher. It's worrisome, but at least we are holding this 3.72. This is the critical mark that I think, in my opinion, will mark if we go below this line, prepare for recession being called out. And the 10-year 3.43, 3.20, sorry, 3.32 on the 10-year is also the line on the sand for me to call the recession in big impact. December, interest rates futures. We left the gap behind and we are 4.5. 4.5 on December just means that analysts are again pricing in interest rates cut. So I think 25 basis points for May, it's quite the deal right now. It's already priced in, despite the fact that markets were denying that. And what markets are also still betting on is interest rates cut on December. So they are pricing in 4.25, 4.50, 4.50 based on bonds market. So if we hike 25 basis points in May, to reach 525, they are pricing in at least 225 basis points, because I don't think 150 basis points cut is going to happen. I don't think either that any interest rate cut are going to happen this year, but that's what bonds market are pricing in. So let's see what happens. They are pricing in an interest rate cut on December, at least that one. On September, if we check the features for September, 4.87. So basically 2 cuts, one in September and another one in December. 50 basis points in total to reach 4.50 since from the 5% that we are going to hike on May. That's their view, their plan that I'm not agreeing with. I don't think this year is going to happen any interest rates because Jerome Powell and the Feds are really focused and committed on fighting inflation. They don't want to take any risk, and if markets and the economy is going to suffer, well, banks already suffered and they were resilient. They held. So why not the economy? They don't want to take, Fed, I think, is not going to take any risk with inflation and start cutting before anything big happens. So that's my view. I agree with the Fed, and be careful because the stock market is pricing in this kind of move. So let's see. This is the starting of the move. Good base. Let's see what happens. We saw a lot of weakness. I took a couple of shorts here. I took a long that I was chopped out, so barely green on the day. Today's a tricky day due to tomorrow CPI and FOMC minutes, but I mean, there's nothing you can do when crude oil is pushing higher. And I mean, Tesla is the only one. I don't think there's any big news for Tesla. Let me check. So Tesla, no. There's no news. So I don't know from where this is happening. This is usually how Tesla does things. But again, I don't think with Apple being in the red and having this kind of weakness, I mean, it's looking now good on the point of control, but Microsoft is super weak. I don't think Tesla is able to just reverse everything. Okay, look at this. Well, it is what it is. Be careful with this kind of move. I think this long was a good idea, but don't be too greedy. Today is not the day to take higher risk. I think tomorrow we will have better opportunities. because tomorrow we are going to have inflation rate still slightly decrease on month-over-month general inflation rate, but this is the important one. Core inflation rate 0.1 higher on the year-over-year and slightly decreased 0.1 on the month-over-month. This is the one that is sticky, the core inflation, and more than that, the services. So just don't follow the first move, read the report and see what is doing the services. Services is the key, is what Feds are going to watch. FOMC minute at 2 p.m. And if you are not aware, well, we have on Wednesday, we have CPI. On Thursday, we have, let me show you, Thursday, we have PPI, and on Friday, retail sales, and this. Starting on Friday, we have banks earnings. Citibank, Wells Fargo, BlackRock, and JP Morgan. Oh boy. This is going to mark the price action and the overall sentiment for, I think, for weeks. If they are doing good, that could boost and push the market up. But if they are feeling the pressure, oh boy, prepare, because I think a lot of people is going to bail out on their positions, and that could cause the market to sell off. So be careful with that, because don't forget about Friday. Wednesday, CPI, Thursday, PPI, and Friday, retail sales and banks earnings. These are the big ones. So let's see, before closing up, let's see how markets are doing. Well, Nasdaq is trying to build some pressure. Crude oil is still going higher. Dollar is seeing weakness. I don't think why Tesla is just flying, but it's really pushing the Nasdaq up. I would not take any position unless Microsoft shows signs of strength, at least a higher low above this pivot. This pivot is maybe changing on perhaps a flip on point of control to support the move up with volume, but I don't think Apple is looking great, at least on the point of control, but Nasdaq still, I don't trust this break. We had it earlier and we just broke it again down. So don't be greedy, just wait for those pullbacks, minimize risk, and you have, I mean, for longs, I was waiting for this long, like a lot of time. This was my target. It was a 5 profit loss ratio, was this low, and I got chopped out in this candle. It is what it is. So it is what it is. But again, overall, markets are weak. A lot of big funds managers are hedged for tomorrow. And on Friday, we have tomorrow opportunities with CPI. On Thursday, we have opportunities with PPI. And on Friday, we have banks earnings, maybe changing the overall sentiment. So react to those earnings and also retail sales. So there's plenty of opportunities this week to make money. So don't fall into FOMO, just be patient and remember that discipline and risk management are key. So as always, thank you for your time. If you found this video useful, please remember to click the like button and subscribe to the channel to receive notifications when I upload new videos. Remember that I upload new videos every single day for market forecast, market updates, and market recaps. I appreciate your time as always, but the trading day is not over yet. Basically, I'm seeing that Secretary Janet Yellen is having a press conference, so I think that's why markets are maybe doing these kind of things. That's being super volatile right now after all this weakness. So be careful with that. Take a look at the press conference of Secretary Yellen and be disciplined and manage your risk. Those are the main things that you have to develop in order to be successful in trading. Thank you for your time. Stay safe, everyone, and see you tomorrow.